Well, good morning. I know we're running a bit late, so I'll just jump right into things here. We'll be making forward-looking statements. I wanted to start out by just talking about copper, because I know we talked a lot about gold, and I love gold, but it's such an emotional metal. It gets a lot of drama. Copper is not. It's a fundamental metal, and it's basically energy. And you should think about it as investors when you think about energy. You can't produce energy, transfer energy, or use energy without copper in the mix. And if you like a green world, you'll need more copper. And so we love solar, we love wind energy, and we love all the new high-tech stuff because it all requires more copper. As the human race is evolved, we always need more energy, and that's not going to change. As China and India develop, as Africa continues to develop, they're going to need more and more energy. So we don't see, it's on about a 3% growth. The consumption of copper is about on a 3% growth, and it never really varies too much about that. It doesn't matter whether China's expanding or contracting or what's going on in China. They always consume more copper this year than they did last year, and that track record's out there. For an investor, okay, so that's why copper's important. It's just a fundamental metal, but it's been in a funk for the last 5 years because when copper was at $4, we built too many copper mines. That's what happens. That's why it's a cyclical metal, and it's probably always going to be a cyclical metal. It bottomed out at $2 a couple of years ago, it dragged along the bottom at a $2 copper price, and the solution to oversupply is low prices because nobody builds new mines, nobody expands mines. They tend to high grade, which actually exacerbates the problem because you actually produce more copper when you high grade your mine. But when you finally get through that cycle and it goes back up, you have a supply disruption like we have going on in Escondida, the largest copper mine in the world in Chile, operated by BHP. And guess what? Now that oversupply is no longer there, there's a 30-day strike at Escondida, and boom, copper prices are up. Freeport has ongoing issues with Indonesia. They've always had ongoing issues with Indonesia and renegotiating their contract to work. At Grasberg, well, it's a big deal. It's the second largest mine in the world. Boom, copper price is up. That's what that last spike is there, and it's just starting. So for investors getting in the space, now is a great time because copper will go back to between $4 and $5, which is what it did the last part of the cycle. So it's a good time to be in the space. So why Nova Copper? Sorry, why Trilogy Metals? I said Nova Copper because we just changed our name, and I'm still living in the past, I guess, sometimes. Well, the reason why you want to invest in Trilogy is because we have a hell of a lot of copper. 8 billion pounds of copper. We are naturally diversified. We have a significant amount of zinc, about 2 billion pounds, and over 1 million ounces of gold equivalent, gold plus silver. It's high grade. It's 6% copper equivalent. That's the highest grade copper project you'll see in the world. That's an open pit. It's in a safe jurisdiction. It's in Alaska. I'm going to talk to you about two projects, Arctic, which is at the pre-feasibility stage, and Bornite, which is at an earlier exploration stage where we're still trying to figure out how big the ore body is getting. Alaska is a safe, rule of law jurisdiction, and Alaska is all about resources. It's about oil and gas, mining, fishing, timber, and tourists. That's what you do in Alaska. There's nothing else to do up there except drink. We are partnered with an Alaska Native Corporation, and that's important because the biggest risk that miners have worldwide is social license, and it's a pretty touchy topic. And when you're a partner with an Alaska Native Corporation, that doesn't guarantee social license, but it gives you a good avenue and a good foundation on which to build it. And so I'll explain who our partner is there and why that's important. We're also partnered with the state of Alaska, who are building the infrastructure to help support our project, and I'll walk you through what they're doing. Lastly, this is a district play. This is not a single little deposit. It's a whole district. And so it's a fantastic opportunity. And once we get the first mine going, there'll be many more to follow. Just a bit on our share capital. We have a little over 100 million shares outstanding. We're traded both in New York and in Toronto on the TSX. We trade most of our stock does trade in New York. It's probably about a 10-to-1 ratio. We have $7 million in cash, no debt, and about $10 million in marketable securities that we're continuing to sell down. We have a blue chip shareholder group. I like to refer to them as 4 billionaires in RCF. Electrum, Paulson, Baupost, Resource Capital Fund out of Denver, and the Gold First, which is a resource fund out of Hong Kong. Together with management, that's about 60% of the stock. So we're all seriously invested here. And this is long-term patient capital that knows that real mining projects, not promotions, but real mining projects do take time to move through the value chain. And that's exactly what we've been doing over the last several years. We're located in Northwest Alaska. Now this region is home to the about 5,000 Inupiat Eskimos. And they have a native corporation called NANA, which owns the Red Dog mine. It's the largest zinc mine in the world. It's been operated by Teck for the last 27 years. So this group, this population, understands mining. Half of the mine staff are Inupiat Eskimo NANA shareholders. When they settled their Aboriginal rights and title with the federal government, they were allowed to select land, private land that they would own. The federal government took all the oil and gas rights and left the natives to select mineral rights, and that's exactly what they did at Red Dog and also in the Ambler Mining District. It forms the tax base for the region, and most of the good jobs are available at Red Dog. So what they want to do is develop a second mine in their region, and that'll be us. We partnered with NANA for three fundamental reasons. One, we think it's a good idea to have a local native corporation partner in Alaska. I grew up in Alaska, so I probably have a better understanding and a good understanding of how to work with Alaska Native companies. Second, they owned all the flat land around our deposit, so in order to develop our deposit, we were going to have to do business with them anyways. Third reason, they owned the Bornite project, which is an exploration project that I really, really liked, and so we basically pulled our assets together, our land package that we had staked on state claims, pooled that with their patented lands around the Bornite deposit. So we control about 350,000 acres of land. That's a huge land package. It's the entire district, almost. Our other partner in this venture is the state of Alaska through what is called the Alaska Industrial Development Export Authority. It's essentially a state infrastructure development bank. They own and operate the Red Dog Road and the port facility that connects the Red Dog mine. Connects the Red Dog mine with the port at the DeLong Mountain Port facility. So that was paid for by bondholders who ADA issued state-backed bonds, infrastructure bonds over a 30-year period, and were paid back by tolls paid by the mine. It now generates about $27 million of cash flow for the state of Alaska. Bondholders were paid off about 7 or 8 years ago, and the tolls now go directly to the general fund for the state. So it's been a very good business venture for the state. It's the same model they want to do to build an access road that links the Ambler Mining District with the existing infrastructure in Alaska, which is the Dalton Highway, that north-south highway that goes up to the North Slope and connects it down to Fairbanks, and then that would connect to rail down to the port at just north of Anchorage called Port Mackenzie. So that's a year-round port. That's a big advantage. One of Red Dog's biggest headaches is the port is frozen for 9 months of the year. Despite global warming, it's still frozen 9 months of the year. That means they have to store their concentrate for 9 months. That's very expensive to do that. So high capital and high operating costs as a result of that. Getting us access to the Dalton Highway and down to Port Mackenzie gives us a year-round port that we get our supplies up on a daily basis and our concentrate product out on a daily basis. So a huge advantage. ADA is currently permitting the road, and BLM issued the notice of intent earlier this month, and expect to have the permits in hand by 2019. That's about the perfect timing for us to dovetail our feasibility level work on our project. So I'll walk you through what we're doing now. So here's the deposit. This is Arctic. I told you we're going to talk about two things. This is the more advanced project. We're currently doing a pre-feasibility study on this. We expect it to be done first quarter of 2018. And you can see the grades there. It's just an exceptionally high-grade deposit. It sits underneath the hillside there at about 100 meters depth. There's 5 stacked lenses of high-grade massive sulfide that average 6% copper equivalent. You can see what they're made up of. We're 3% copper, 4% zinc, a little bit of lead, and some precious metals thrown in for good measure. It's an incredibly high deposit. I don't think there's a higher grade open pit copper mine on the planet. Metallurgy is excellent. This whole area has been it's been buried under high pressure and temperatures, so it tends to recrystallize the sulfide minerals, and we get very good metallurgy out of this. So we're getting over 90% recoveries of the zinc and copper, and we're forming good high-grade concentrates with no deleterious materials, no arsenic, no antimony. In our copper concentrate, which is grading between 28 and 30% copper, which is at the high end of the spectrum. Our zinc concentrate is going in the high 50s to 60%. Again, no deleterious materials. We're still working on the lead con. It's the least valuable of all the concentrates. And what is most valuable in the lead con is actually the gold and the silver that report to it. So that's probably the area that we're still working on to figure out whether we should just remove the gold and the silver on site or transport the lead con containing the gold and the silver. We'll be working on that over the next few months here. We completed a PEA, preliminary economic assessment, on this back in 2013, and which demonstrates the high quality nature of this deposit and very high NPV, using long-term metal prices that I think are still fundamentally fundamentally the same as what you'd use today. That's $2.90 copper. We're probably low on zinc. We used 85-cent zinc, and I think most analysts would be using somewhere north of $1 zinc prices long term now, and then precious metals are pretty much in the wheelhouse. So you can see we'll be producing copper on a byproduct basis for 62 cents a pound. If you look at an all-in sustaining cash cost, $1.26. Copper is trading for $2.50 to $2.70 range right now. So you're generating a couple $100 million of free cash flow out of this thing. It's an amazingly wealthy, rich deposit. And as I said, I don't think you'll find a higher grade one on the planet. We're going to, on the pre-feasibility side that we're working on, we're going to focus on two areas to improve the economics of the deposit, which is already very good. One is using liquid natural gas. When we did the PEA, we assumed we would use diesel fuel, which is fairly common for remote operations. But since we did the PEA, there's now an LNG plant in Alaska, so we can price out what LNG will cost us to use. And LNG delivered to site is about half the cost of generating power. And again, this is a remote site, so we have to generate our own power. And power makes up about half of our processing costs. So processing costs were about $20, and power generation was about $9.60. So if we can cut our power bill in half by using LNG, which will be about the same cost to deliver as diesel in terms of transporting it, we're gonna improve the economics significantly. The second area that we're looking to augment the economics on is using some new ore sorting technologies. Again, this is a very high-grade deposit. There are 5 individual massive sulfide lenses that are separated by non-mineralized schist rocks. So they're basically rocks that contain little to no sulfide mineralization. We have to mine them together. So we get about 50% dilution of the rocks that we don't really want in the first place when you mine it at the scale that we want to mine it. And that's, as a geologist, that really hurts me because I see my grade go from 4 or 5% down to 2 or 3%. But that's what the mining guys have to do. Well, what we're going to do to correct that is to use ore sorting to get rid of the rocks that we didn't want in the first place. And there's been some really great advances in ore sorting technology with the new software recognition programs that can actually, not only can you determine that this rock has copper and this one doesn't, but you can actually take a picture of the rock and recognize it and get rid of it at the end of your sorting conveyor. So this is new technology that we're going to be applying to this to see if we can get our grade back up that we diluted basically by the mining scenario. So you look for those results in our pre-feasibility study early next year. Last couple of years, we've been just focused on Arctic and doing all the infill drilling. So we will update the resource here. We should have a press release out in April. We talked about the metallurgy. We'll have a press release coming out on that here in the next few weeks. We've done the hydrology and the geotechnical pit slope stability studies. All that's been work that's been now completed to a pre-feasibility level of study. The last thing we got to figure out is, okay, where does the waste and the tailings in the mill go? And that's work we're going to undertake this summer. It's about a $2.5 million field program that we'll undertake, and then That'll be the final step in completing the pre-feasibility study. So we know everything about the ore now, and now we need to worry about all the waste material, waste products. As I mentioned, Arctic is the first deposit. There's 25 other known massive sulfide occurrences on the property. Some have historic resources of 5 to 10 million tons based on previous exploration work that was done back in the 70s. So we've got a lot more upside to the story because it is a district. The project that we've been focused on is over on Bornite, which is about 25 kilometers to the south west of us, not very far. Good potential synergies between the two projects. So I'll just give you a quick introduction there. We're still exploring, we're still trying to figure out how big it is. It is lower grade than Arctic, but it's still very good grade in terms of the worldwide copper space. First year, we did the deal with NANA in 2011. First year, we outlined 125 million tons of 1% copper. Next year, we followed some geologic targeting on a deeper target. We outlined in an underground mining scenario almost 60 million tons of not quite 3% copper. So a very good grade for an underground mine. Last year, we did work in 2013, the third year we explored out here. We connected the two. We did some geologic interpretation and found the two zones were actually on the same horizon. We drilled 5 holes, and all 5 hit good grade mineralization. The best hole was 236 meters of 1.9% copper. That's very good. 236 meters is a lot of big thickness of copper. Unfortunately, it was 2013. Copper price was down at $2. The market didn't care. So we got the message and we stopped drilling. But we would love to get back and continue to drill there, in which we're working on a plan to do that this summer. So if we can get that accomplished, we'll be generating more drill results and expanding that resource. Just to put the context of what we've discovered already with the Arctic and Bornite together is half of the Mount Isa district, what Mount Isa district has produced in copper over the last 80 years. It's 400 million tons of 2% copper average grade. The same scenario, combination of open pits and underground there. That mine is now operated by Glencore. It still has a 15, 20-year reserve life. In the 3 years that we've been exploring Bornite and combined with the Arctic deposit, we have half of Mount Isa. That's a tremendous accomplishment in a fairly short period of time. So we'll be working hard to get the pre-feasibility done by early next year. When you look out in the copper space, what else is out there that can potentially become a mine? This is the list of them. Most are owned by the major companies, and most are not mines for one reason or another. They're too low grade, they're too high strip ratio, they're too far from water, all sorts of reasons. You can see that we've highlighted here grade, and grade is king in our business. Grade makes up for all the mistakes that you can make in developing a mine. When you have 6% equivalent, there's nothing else out there in the world like it. So we're pretty unique. The only other deposit was like it was Reservoir, and that's a company that was taken out. Reservoir Resources was taken out by Nevsun here last year for a pretty handsome premium. 100% owned project, low OPEX, low CAPEX, safe jurisdiction. It's a whole belt of VMS deposits, plus Bornite's a little different geology, but already starting to become a respectable resource of copper and a good grade. We'll get the pre-feasibility study out in Q1 of 2018. We'll look to put together a plan to drill Bornite, and again, we'll continue to update you on our progress as we do that. I'm not sure if we have more time, but
it's lunchtime. I'm hungry.
I think everybody's hungry. Thanks.